Welcome to Connect, the weekly podcast of the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. Before we get into today's presentation, I'd like to thank our Connect podcast sponsor, Incelerate. Incelerate helps lenders close more loans through better borrower engagement. The mortgage industry's most innovative customer experience platform, which delivers lead management, sales enablement, engagement, a robust mortgage-specific content library, and data intelligence, all in one comprehensive and highly scalable platform. Incelerate delivers dynamic technology, strategy, and content for every channel of your business to ensure engagement throughout the customer journey, whether it be your borrowers, referral partners, or any other party to the loan transaction. This dynamic enterprise solution seamlessly fits into your tech stack due to their advanced API connectivity, modern design, and open architecture. Gone are the days of managing multiple and separate systems and having your data trapped in data silos. This innovative platform allows you to provide your internal and external customers timely, relevant information based on data intelligence to build repeatable outcomes at each stage of the customer's journey. Close more loans, improve borrower conversions, enhance customer retention, and transform customer acquisition life cycle and create customers for life. For more information, visit incelerate.com. And that brings us to my guest today. I'm very happy to welcome our mortgage innovation conference sponsors, Lender Price. I'm welcoming Dawar Alimi, the CEO, and Rick Webster, your Chief Marketing Officer. Good afternoon, gentlemen.
Good afternoon, Susan. Thank you for having us.
Thank you, Susan.
Happy to have you guys involved. We're getting excited for the big conference coming up and want to highlight some of our companies that are going to be showcased at the conference. So I usually like to start out with a little information about how you got in the mortgage industry, and in particular, Dawar, how you got Lender Price started.
Sure, yes. How did I get in the mortgage industry? Interesting. So actually I got I've got an undergrad and graduate degree in computer science. I'm a software engineer by background. Got in the mortgage industry back in 2000. Shortly after that, I worked for a mortgage company at the time. This is back when, lenders and, were trying to network their systems and really at the very beginning of actually building application and using technology. Shortly after that, I created a mortgage company, a wholesale mortgage company. I've owned an escrow company and a software company that created an LOS. Founded Lender Price in 2015 with my co-founders. Shortly right after that, we got investments from Kevin Costner. I think the name speaks for itself. Rod Lake, who's the co-founder, who's one of also our co-founders, and he founded Airborne and several other ventures. And he's also Kevin's business partner. We got investment from Regions Bank, Mr. Cooper, Glenn Stearns, as you guys know. Now he owns Kind Lending, and Argentum, which happens to be, we got a growth equity round from Argentum, who just recently invested in the sponsor, Incelerate. So Argentum invested in us prior to Incelerate, and we couldn't be happier to be associated with Incelerate through Argentum. So we founded the company in 2015, and really what drove it is being in the mortgage industry for a very long time. We felt that in around 2015, with the new frameworks and the stronger browsers and all these open source technologies, JavaScript frameworks, we noticed that there were applications that were being built that solved the user experience problem. So you have a lot of these legacy applications that are plagued in the industry. I mean, in our industry, in the banking sector, and all of these new frameworks and JavaScript frameworks made the user experience better. That's really what drove us to create Lender Price, is that we felt that there's a better way for loan officers to price loans, but better yet, have the back office, the secondary market teams manage loan programs in a much more efficient way. Since then we've created various technologies on the back end that's helped ease adding loan programs. We use natural language processing, which I can go on and discuss a little bit later, but that was pretty much the motivation, is to provide a better user experience, a better application that can streamline the mortgage pricing and secondary marketing side of things in the mortgage industry.
Got it, got it. And Rick, you haven't been with Lender Price for too long, have you?
No, I've been here as just about a month now, and it's
we hired Rick, just so you know. We have never done marketing, and if we have, it's been very little. And we just Rick has been with us for about less than a month, right, Rick?
Mm-hmm.
Yeah, and he's I mean, the amount of knowledge and the things that he's done on the marketing side has been tremendous. It kind of makes you think, like, where was Rick before?
That's great. That's great. So what do you see? Technology is so is white hot in the mortgage industry right now. What do you see, Dawar, as like the next big thing as far as technology goes?
Yeah, so I think really the next big thing is digitizing the fulfillment side of things, and that's where we're focusing on. Is really the underwriting. We have the pricing side. You had a lot of these point of sale vendors come out and made the borrower user experience much better by applying for a loan digitally. This certainly helped out during COVID, but it didn't really solve the overall cost of the loan. Still, mortgages still cost a considerable amount. I think that the more digitization of the fulfillment process occurs, the lower we can get these costs down. So with us, what we've done is we are going to be introducing our automated underwriting engine for non-agency, non-QM loans. And digitizing that process as far as like bringing in, digital asset verification, digital income verification. Essentially, what we want to be is we want to be the decisioning engine that gets plugged into the point of sale applications out there, the loan origination solutions out there, and the CRMs. So what I like to explain it is like we kind of want to be the Apple CarPlay. That gets put in every car.
With refis diminishing in this year, and what do you see from your lender clients as far as what can make them successful in this really competitive purchase market?
I mean, number one, absolutely focusing on non-QM. You're seeing guidelines relaxed. I mean, for those of you who've been in this industry for a long time, and Rick, please add add to what I'm going to say here, but those of us who've been in the business for a long time, we know that it's very cyclical, right? So refinances have dried up. We're moving into this purchase money market. You're seeing a lot of these non-QM lenders provide products that are that have 24 months personal bank statements, 24-month business bank statements, DSCR. They're trying to make they're coming out with guidelines that are really geared for the borrowers out there that couldn't necessarily get approved for a QM loan, right? So,
right.
So I think that what you're seeing is a lot of these lenders augment their product offerings with non-QM.
Right. Yeah.
And that's where our solution is really nice, because it's an all-in-one solution where it's a pricing engine where you can offer conforming products and non-QM products. Rick, you want to add to that?
Yeah, and just to kind of add to that, I mean, this is a time where loan officers and banks, credit unions, everyone had it good for a long time, right? So now we need to start getting creative on how we market our product and services, and really starting to leverage data, right? So it's really important for lenders to really kind of start looking inward and reimagining their tech stacks to really drive efficiency. So, as volume dips, You know, there's more downward pressure on cost, right? So now it's really important for lenders to start thinking about how they can get efficient, how they can leverage technology in ways that are going to rise up or help their originators find more opportunity, you know, inside that technology. And that's where Lenderprice really shines, is we can really help, you know, brokers, originators, anyone that's really pricing out a loan, you know, find loan programs and rates that they may not know existed, right? So we're really bringing that to the surface for them to bring back to their borrowers to say, actually, I just found a, you know, an even better rate and an even better program, that might actually be the catalyst to win that deal, right? So we really are, you know, really bringing that technology, the rates, the program, the pricing, everything to surface to really give originators an edge in this market. So, you know, with volume down and you know, the shift to a purchase market or post refi recovery, we like to call it, now it's more important than ever to really start leveraging your technology to continue to maintain volume and find those opportunities in the market.
Right. It's interesting how, you know, we got into the early days of the pandemic and there was just no non-QM market for a minute, right? And now it's like coming back, you know, full vengeance, right? And I did notice that your product is compatible with non-QM lending. So how do you think that differentiates you from your competitors?
Well, it's interesting. So a lot of the legacy engines out there, you know, so what we've seen with lenders out there is that they'll choose. There isn't a solution out there that has it's an all-in-one solution where you have one solution for all your products. You know, all of your different you know, product mixes out there. So that's a huge differentiation right there. The fact that you can actually use, you know, our backend uses natural language processing, so you can actually type out your rules, and you could type out your rules for non-QM. You could type out your rules with, I mean, this is sentences, so you're actually writing sentences. So you're not writing if-then logic. You're just writing sentences, and our application can take keywords, and it knows how to actually create your rules for you. So that's another differentiator, because it's the pricing on the front end to have a loan originator to be able to put in their loan parameters for the borrower and see various options from QM and non-QM is a game changer in one screen. Right now, lenders have to log on to, or they use different pricing engines. They'll use one pricing engine for conforming products, and they'll use another one for non-QM. But the experience that lenders want is one pricing engine for all of their product mixes, for all of their product lines, whether it's conforming, non-conforming, non-QM, portfolio, second liens, home equity, etc.
Yeah, and just to touch on that too,
Right.
I mean, originators are really looking to be able to do that on the fly, right? So we're a mobile environment, a mobile society, so giving them the ability to price loans anytime, anywhere is a huge game changer, right? So, you know, if you're at your kid's baseball game, and we all know plenty of originators out there that are working remotely, that may be having a conversation while their kid is at bat, ready to hit the ball, ready to hit a home run, right? They're able to price a loan from that game, and you know, get that information quickly and be able to, you know, go through many different programs to find the one that fits quick. So there's a mobile element to it as well, and a mobile experience to be able to look at both QM, non-QM, and, you know, just loans from across the table, so to speak.
Yeah, we're all used to having everything at our fingertips now, right? We have to keep up with that, with those expectations. What are you suggesting to lenders to kind of adapt to or shift to a slowdown in the market?
Yeah, so number one, I mean, I think that Rick touched on this a little bit, earlier, is as the market slows down, this is the time that you really need to look at your tech stack. You know, because we're in a cyclical industry, this is the time that you need to figure out how can technology, how can it, technology add some efficiencies that I didn't have before. When we're in the refinance boom, nobody wanted to touch their technology because they're like, look, you know what? We need to close as many loans as we can right now. Let's not touch our tech stack. Let's not do anything. But now is the right time. And if you look at things historically, this is the time that the top lenders start positioning themselves so that once there's, whether it's getting, answers back faster to realtors, making it so that pricing is more transparent to the, to borrowers on their website. I mean, we're seeing a lot of that in the point of sale space. Prior to this, it was, hey, borrower, apply for a loan, give me all your information, then we're going to let you know whether you're going to get a loan. Now, a lot of these borrowers who have applied for a loan during COVID, what we're noticing from our point of sale vendors is that they're saying they want upfront pricing. They're saying, before I apply for a loan digitally, what am I going to get? Give me like, what products do you have? What does your interest rate look like? So they're integrating with our solution. We're integrated with Blend, with Flowify, with Roostify, with all the FIs.
That's a list of FIs.
yeah, and it's because of this. It's because they see that our solution is modern. It's got a modern API. That's another thing too. Is like, you see these legacy systems out there, and they've got an application, and then they come out and they say, oh, we've got an API. Well, it's an API over a legacy system. You're not going to get the performance. You're not going to get the the vast amount. It's not going to pair the borrower up appropriately with the product that they should be paired up with. Our API delivers that. So right now, it's really important that you look at your tech stack, look at us, look at others out there, figure out which one is the right fit. We've been around for 7 years now, and some of the largest institutions are using our pricing engine, our platforms. So we're not new, we're proven. Because I remember, like, when we're new, it was tough. We thought we knew everything. We went out there with a pricing engine. We said, we've got it all. We've got everything that you need. Until you go through these big implementation projects, do you find out that no, we're missing a lot of these things, and then we have to build it. So, look at your current tech stack, because technology is moving at a rapid pace, and right now, with the slowness in the market, this is the time to start making some changes.
Right. Yeah. Take those efficiencies that technology provides to you and make good use of that, especially when there's a slowdown, in the market. So I kind of want to wrap up today's conversation with a question about, your involvement and support for the California MBA. So as you know, California MBA serves as the voice for the real estate finance industry in California. Advocacy is truly the cornerstone of what it is that we do. Can you share with our listeners the importance of supporting the advocacy efforts of our association?
Absolutely. I'll add some, and Rick, you add some too, but advocacy is really important. What people don't know, in college, I was a student body government, so I stood up for student rights. So advocacy was really important for me. And it's important because whether it's legislation, whether it's keeping up with current news, other technology vendors, other wholesale lenders out there, other non-QM lenders, where are you going to find that information if you're not part of the CMBA? It's not only just being part of it, but it's being involved. Be part of the committees. Commit yourself, because there's a vast amount of information that you're going to gain from it. I learned that earlier on when I was in college, and I still stand by it today.
Well, thank you. You're right. We have, our ability to stay strong for the industry does hinge on the support that we get from the industry. So thank you for that plug. I appreciate it. And thank you all of us for joining us today on today's podcast. To access Connect on any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. And Dawar, Rick, thank you so much for being our guest this week. And I look forward to seeing you at the Mortgage Innovators Conference. And that's it for this episode. We'll be back next week with another episode of Connect. Have a great day.